Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Scott Redler on the line. He's Chief Strategist at T3 Live at T3 Trading Group. He joins us every Monday to get us ready to trade the open. And Scott, we got a higher open to trade here. What's your thoughts this early in the morning?
Well, I think some people might have brought a little risk down on Friday because of the way things took. Somewhat luck. We still didn't know whether Paris would get a deal or it would be a hard default. But the technicals have been lining up for higher prices. So at least, hopefully guys aren't coming in short, because of Friday's down move or short even from last week. Because if you remember, we had a pretty clean breakout, in a lot of sectors. And if, you look at the chart of that SPX that I sent you, there are definitely some guys pointing to a head and shoulders top. And we spoke about if we can get above 2106 or 2115, that would break that descending channel there and at least, get short off the brain, look for some longs. And, with that, the strong breakout in the bios and the Russell, supported at least a thesis for some higher prices. And I think a lot of people aren't coming in short. They're not just coming in long enough because it was a little hard to put on excessive risk with the unknowns of, potential no deal or no whatever, considering that things did close on their lows and were down after hours on Friday.
What do you think? I mean, after that weak close on Friday here, big selling balances here, and now you're just up on on this Greekness. Is it your first thought, like, boy, people that didn't sell on Friday, they're going to be like looking at this 14-point open as a gift open here, and I just don't see us just going right back up to that pre-market high. What's your thought on that?
I think there's going to be two different schools of thought. You are going to have some people who held on Friday and checked their positions at the end of the day if they just had stops and were upset, like, oh wow, I'm not going to get caught again this time. And then you have some people that actually probably sold trying to be prudent on Friday, saying, wow, I can't believe I don't have what I had on last week, which is kind of like me. How do I, comfortably get involved so I can participate this week, which what could be, a better price this week? Because I'm in the camp that I think we take out that 2134 in the S&P. It's just, how does it happen? And, I think some charts are more constructive than bearish, and there names to be in better than others. So, with the futures up 14 handles, which were up off a little off the highs, I would say, on the first pullback, maybe buy versus a 15-minute low and then see what happens. If we were to go red today and trade below Friday's low, that wouldn't be good for the charts. But I kind of think that's not going to be the case. I think, there'll be ways to get involved long and then just give yourself a bit more room. Because there are some guys who held all their longs from last week and some guys that had tight stops, and I feel like the way the HFTs are out there, maybe have less shares, stick to your position, and don't be as tight, because being tight is what's been hurting traders lately. Really not helping them unless they're covering shorts on the tight side.
Right. Also looking at the IBB here and kind of kicking myself. We did talk about this one. What a setup that thing gave you on the daily charts. I mean, how many times did it kiss up against that the 366, 367 level, and then you got the breakout on Friday here. In order to continue this in the breakout mode here, do you go all the way back down to where it broke out from, that 367, 368 area, or would you play things a little closer to the belt here, that low from Friday, use that 375 as perhaps danger area?
I would say if the IBBs get back down to where it broke out from a 368, you probably don't want them. That would be somewhat of a breakout failure. Like you said, it was a real tight channel last week, and it closed on high the day of the Fed day, and then you had that really nice trend up day above a level, and that was your Thursday. So Friday, with a little weakness, it's not something that unorthodox or whatever the word is. You can't. It's to be expected considering one from the low end of the range to the high. So I would think that the momentum to stay really tight or in there, that 375 holds, or at least 374. 374 is the prior high. I wouldn't expect another move like last Thursday, but I would think that now with a little sideways digestion, it can continue. It's a little stretched right now, so I would say it would be better to go sideways versus go up right now. And I think 374, 375 would be your active stop. And if you do get stopped out below, then and if it does an RDR where it steals your stop and comes back above it, then maybe try and be long versus whatever that low is. But in that area, I would think it would hold to keep the momentum here.
Do you trade the IBB? Do you trade the ETF or options on it?
I do trade the IBB from time to time, and my floor actually had a really nice move with it. When we do a morning meeting every day on 9 o'clock. Also, not Mondays. Mondays isn't here, and most of the guys were looking at it and saying, "Wow, look how it's brushing up against 367." There was some decent news in some of the components, so guys run with that, quickly off the bat. And that gave you some clues also that the first pullback in the spiders that day was viable because you had to strengthen the Russell in the bias. So either you trade them or you watch them and try and trade other things, but the better move was obviously being in them. And, bios are not my specialty just because I kind of am risk averse. I don't like sitting in things that have data or have a potential FDA or this and that. So when I do trade the bios, I tend to trade individual names just intraday and not hold them. And then, if I want to be long and have equity exposure, which I don't have to the IBBs right now, I'd rather be in the IBBs so there's not as much, single stock risk.
A lot of people go to the small caps to look for, the next turn in the markets. And the small caps have been having trouble at the 127 level, looking basis the IWM here. And got a nice rally above that here. What are you looking at the IWM?
I think same kind of situation as the bios. A few inside days would be nice. You had a nice breakout last Thursday. Friday, you had a bit of a doji. Now I would think maybe 127, 126, 127.60 needs to hold. And, if we could hang out here for another day and flag, there could be another trade above 128.24 to highs. We are a little extended from the 8-day and all the moving averages, so I wouldn't be buying strength in the Russell and the bios right now, but I think both of them aren't shorts unless you're going to be super cute. But if you're trying to be super cute, that can make you ugly if it starts going against you and you don't have the right discipline. But ultimately, in my thesis for 2015, I put that I thought the Russell would finally break out and provide some alpha. So for those of the people involved in that, I'm glad you're doing pretty well. And those of you trading it, at least, it's been trending higher and you got that clean move last Thursday. Now this week, could continue to have those gains, but I don't think as much as last week.
And boy, oh boy, the financials, they really kicked things off a couple weeks ago, perhaps preparing for a bump in interest rates. That hasn't happened here. Do you trade the individual financial stocks? Do you like to trade the XLF? What do you trade? Goldman Sachs when you go into the financial arena?
Well, it all depends on, where we are within the move of the chart. You want to try and stick with the leadership, and Goldman Sachs has been a leader with JP Morgan, and I've been trading them from time to time for cash flow. And then in my note, I've also, every time it seems like it's going to pull back to the 8-day, I list that price, and I'm like, maybe try and buy it versus that. So they've been holding the 8-day and the 21-day if you want to give it some more room. On Friday, though, I don't know if it was options related. I don't know, people were scared of a default, but I think the move Friday was a little harsh in the XLF where it broke the 8-day, which is the first time it's done that in a week or so, but it held the 21-day, which it's been above since early May. So today, I think, with the up move and the grease, this and that, some people who got stopped out of the financials on Friday, could be trying to be long verse at 24.74. But if you want alpha, there are definitely different types of setups in the names. With Citi, Morgan, JP Morgan, Goldman, you could either try and be in them and buy the dip at the 8 or 21 day, or when they have potential breakout, charts. You could do like if you look at Citigroup. Citigroup had a nice breakout, above 54.70, which actually like 55ish on June 2nd, or actually June 3rd, and then it's been trending since. So every now and then you can be in a small amount of financials, and then there's also a trade when it's tight. And as of right now, both I would say all these names they're not tight, but they're still holding their at least their 21 day if you like to buy the dips.
I think I know the answer to this because I know you liked your charts and your historical price history. But Fitbit came out of the box, had a rough first day, but trading a little bit better. Or is this something that you or your traders are getting involved in? Fitbit. And do you wear one? I know you're a triathlete kind of guy. Do you wear one of those?
Well, two things. First, whenever an IPO comes out, you want to judge it the first day, but sometimes it's just too much overhang because all the flippers and this and that. But you always want to mark down the IPO high day. And the high of the IPO when it came out was, I believe, like 31.79, something like that. And then on Friday, when it got above that, it went as high as almost 34 and change. So there was a nice trade there for some guys, who were looking at it on my floor. I didn't trade it on Friday, but guys that do specialize in trading IPOs, they were all over that. And now today it's getting a little follow through also. So at this point, I'd like to see it set up versus just, be a kind of a runaway move that you have to be quick with. I did wear a Fitbit about 6 months, 8 months ago, and I liked it. I thought it wasn't great for me. I have a very intense triathlon watch where I get elevation and I get all that kind of stuff on the running. And it's also waterproof. I could see what I'm doing in the swim, and then I could also on my bike see my miles per hour, my my wattage, and so I need something a little bit more comprehensive than just my footsteps. But I do see a lot of people wearing them, and they seem pretty cool. And with the iWatch coming out, maybe it'll validate that area, but also steal their lunch a little bit. But in the beginning stages of the game with an IPO, it's about sentiment, it's about supply and demand. And as of right now, it was a decent trade. Wasn't great the first day, but maybe the way the market's been, it tries to divert your attention so you don't get that free ride. And if you're like, oh, the IPO didn't close above the opening high, let me just take it off my radar. And you missed the 2-3 day move, and you just got to keep things on the radar, I guess, and give them more time with the world of HFT these days.
Is the one that is that one that you have for your triathlons? Is that a Garmin?
Yes, it is a Garmin. That's the one that I use. I love it.
Okay.
It's actually, I actually wear it sometimes out on a Saturday night. It's pretty fashionable. Not so bad. It's like a big black face. And,
Yeah, no, I know. Some of my buddies that I swim with that are crazy enough to do those Ironmans and stuff. They wear the Garmins and in the pool. I just use the old fashioned pace clock. But anyways, let's talk about some social stocks here. And Twitter here, trading up in the pre-market, 52 cents. Left for dead there. Had the move where Costello resigned and they pounded it. Is this something that you're taking a swing trade, day trade? What are your thoughts on Twitter?
It's funny because people on Twitter were yelling at me on June 16th. They're like, Twitter did a red dog reversal. It traded, below 34.31, came back above it. I'm long, are you long? And I was like, yeah, you know what? I'm in Facebook. I'm looking at a trade on LinkedIn. I'm really not that interested in Twitter right now. And then it went sideways above that low for 3 days. And then you had a bit of follow through on Friday on whether it was activist talk, Google talk, whatever. And now it's up. I would trim some into this open up 50 cents because you have some resistance going sideways. You have the 21-day here at 36. But, in these lower levels, you want to be in a tier one just in case an activist steps in, just in case something. You don't want to be too big in somewhat of a broken name, but I'm a believer in the company. I use it. We actually could generate revenue from Twitter, and I have friends around the world like-minded. I love it. So if I'm that interested in it and like it, I'm sure there are a lot of people not saying I'm so smart, but I see it. So at some point, someone will be able to monetize it the right way, and it'll clean up the float a little bit and have a better leadership, whether it's a company or a CEO. So right now it's kind of in the penalty box. If you wanted an oversold bounce, you probably just got it. So, not a spot, to think that you can get paid later in the day or tomorrow if you start buying this up 50 cents after a move from below 34.
You said you make money from that. Do you get like new subscriptions from it, or have you found out other ways to monetize it?
Yeah, I have like 32,000 people on Twitter. So a lot of people from Twitter found my technical note and liked it and,
There you go.
bought it. And so it's like direct access marketing. So I talk and give out free information a lot and talk about my lifestyle, my mantra, this and that. I've given some
Good.
examples of the note that has 25 ideas or 30 ideas, this and that. And then all of a sudden, they oh, wow, I like that. All I need to make money is on one or two of them. I could pay for the whole year. And so there are ways to to reach like-minded people that you probably wouldn't be able to reach through email advertising or through TV even or whatnot. So I think that Twitter is something. I think people would have a hard time without Twitter versus without Facebook, unless you're just pictures and this and that.
And it's free, right? Or is it
Yeah, it's free. At some
besides?
point, if they charge $3 a person, I think most people would pay it versus leave Twitter
Ooh,
or
there you
something.
go. That's an interesting quote. Scott Redler, Chief Strategist at T3 Live and T3 Trading Group. He joins us every Monday morning at 9 o'clock to get us set up for the trading day, his setups, and also some potential things to look at in the market. Scott, a pleasure as always. We'll hope to speak to you again next Monday.
Looking forward to it. Have a great week.